Hello and welcome. You're watching Market Fatafat on ET Now with me, Snehi Shah. This is a show where we'll be taking you through all the big buzzers in today's trade, tell you why they are buzzing, and also give you a technical check on some of those stocks when Ashish Kyal joins us on the show shortly. But before we do that, let's take a look at what the markets are up to right now. We're still sub the 23,250 level, but nonetheless looking good, almost at the day's highest point coming in for Nifty, a 0.3% uptick coming in on that front. Sensex also not lagging too far behind. It's been a day of the green for Sensex also coming in, and Sensex is also up roughly 0.3% in today's trading session. There you have it. Let's take a look at what the broader markets are doing, because stellar gains coming in, no doubt. You have good earnings coming in from broader market candidates today, and all of those stocks are up 10 to 13% each. On the back of that, Nifty mid cap is up 2% on an overall index level. Nifty small cap also 1.4% almost in today's trade, making mid cap the top sectoral gainer when it comes to the peer indices. But let's take a look at Nifty Bank, because yesterday also it was ailing away in trade, and today also slight bit under pressure. We've seen some recovery, no doubt, on Nifty Bank. It's trying very hard to claw onto the green. We are very nominally in the red for Nifty Bank, so not much to worry about on that front as well. Sectorally, let's take a look at what the sectors are up to. Nifty IT is your top sectoral gainer in today's trade, almost 2.5% higher. That's led by the likes of Coforge and Persistent, which are seeing double-digit gains coming in right now on the back of stellar Q3 numbers, followed by Nifty Pharma, Media, Auto, Realty, Metal, FMCG, Energy and PSU banks are nominally in the green right now. However, what's not doing well, like we've flagged off earlier, is Nifty Bank. That's in the red right now, but that's the only sector also very nominally in the red, so we could have all the sectors in the green very shortly. But on that note, then let's kickstart the show and welcome on board Ashish Kyal, founder and CEO of Wave Strategy Advisors, on the technicals, and from our in-house research team we have Ria joining us. Good afternoon to both of you. Ashish, thanks so much for taking the time out and joining us. Your first stock you've picked out on the charts for us is Bharat Dynamics. Tell us what the chart is looking like for this stock, because when I pull up the chart for the last 6 months, the stock has seen a lower double-digit decline coming in last 1 year. However, the stock has done pretty well, more than 50% return. So slight consolidation seen in the recent time, but do you expect recovery going ahead on the charts?
Hi, good afternoon to you and all the viewers. If you look at the charts, I think there is a possibility of a short-term up move that we can expect. From the lows that it made is 950, it made a higher high and a higher low pattern that indicates that the overall trend is changing on the positive side, and we can now expect it to move towards the level of 1450. Even today, the stock has showed a very smart recovery from 20 days moving average, and that has turned the trend back on the upside even on the short-term time frame. So 1450 is the target. One can maintain a stop loss of today's low, which is going to be around 1185.
Those are the levels to watch out for when it comes to Bharat Dynamics. Let's talk about a Nifty 50 company, FMCG major, that came up with its earnings post-market hours yesterday, and that is HUL. Lots of announcements have come in on this front. I mean, it is going to be really less to talk about this, but let's try. You have the top line that has been largely in line with estimates. Everything is done well. PAT also has a one-off gain of 500 odd crore rupees, but if you exclude that, then it's largely in line with what we were estimating. However, the decline is coming on the stock on the back of missed volume expectations, because underlying volume growth on an overall basis has been rather flat. We were expecting a growth of anywhere between 1 and 2%, so that has missed what we were expecting. Now, let's also take a look at some other numbers when it comes to HUL, because if you take a look at the segmental volume as well, other than home care, all three segments, beauty and well-being, personal care and food and refreshment, have seen a volume decline coming in. Now, the outlook over here is the management sees a moderation in urban growth, while rural has sustained gradual recovery, and moderation in consumption trends is likely to continue in the near term. That's what the management has flagged off. When it comes to announcements, they've acquired Minimalist. The ice cream business demerger has been announced in the 1:1 share entitlement ratio, and also acquired the palm undertaking of Vishwatej Oil Industries in Telangana. Very quickly taking you through what the brokerage view is. UBS has maintained neutral. Target price has been slashed by 100 rupees. Nuvama has maintained a buy rating. Citi has reiterated the buy, but also slashed the target price to 2,850 from 3,400 earlier. Macquarie outperformed. Motilal Oswal has maintained a buy. Goldman Sachs is neutral on the stock. So that's the lowdown on HUL's Q3 earnings for you. But while we are talking about the Minimalist acquisition, let's go across and also listen to Avnish Roy, the Executive Director at Nuvama Institutional Equities, what he had to say about this acquisition, if he sees any re-rating in the FMCG space, and also on the stock on the back of this acquisition. Remember, it's a two-part acquisition, 90.5% equity to be bought of Minimalist right now, and the remaining 9.5% in 2 years. Let's go across and listen.
I think it's a good acquisition. it's a large D2C acquisition with 500 crore run rate. So now HUL will get a much bigger play in terms of the premium beauty and skincare, where I think they are a bit under-indexed versus rest of the portfolio. It's a profitable business, and 6 times EV to sales. The valuation seems fair given such large D2C brands we don't have in terms of easy acquisition, plus profitable. The numbers are recovering and defensive nature of the sector. I would say that the re-rating should happen once the Q3 bad numbers are absorbed across the companies. I think the interest is going to come back.
Okay, well, that's the outlook on that stock going ahead. But let's just address the flash on the bottom of the screen. You have the board of IRERA that has approved fundraising of 5,000 crores via QIP. This is what we're understanding from wires right now. The stock is in the green right now. 1.6% is low is where the stock is trading. We're seeing a slight bit of an uptick coming in, but this is not materially still impacting for IRERA. Let's maybe give it some time and see how this impacts IRERA, because other than IRERA also we are expecting another company to Mull fundraising today. We're expecting this announcement to come in from, if I'm not mistaken, it is Bank of India, but then we'll just wait and wait for that announcement coming in. But moving on then, Ria, coming to you, let's talk about the entire India healthcare space. CLSA has come out with a note on it. Mixed views coming in across stocks. Tell us what the note entails.
Well, yes, so CLSA has come out with a note on the healthcare space in India. They expect the India pharma market to grow at 8 to 9% in 2025, slightly better than the US market. The Indian export-oriented companies are also expected to be dependent on large one-off drugs, and they expect generic price erosion in mid-single digits as well. They also expect competition for key drugs to impact Dr. Reddy's Labs, Zydus and Cipla. They do prefer companies with higher domestic market exposure and hospitals as well, and they prefer diagnostics over drug makers. The top picks for CLSA include Apollo Hospitals, Max Healthcare and Dr. Reddy Lalpath Labs. For Dr. Reddy's Labs, they have downgraded the stock to an underperform from the earlier hold rating. The target price has been cut to rupees 1,090. For Aurobindo Pharma, they've upgraded the stock to an outperform from the earlier hold rating, and the target price has actually been cut to rupees 1,400. For Dr. Lalpath Labs, they've upgraded this stock to an outperform rating from the earlier hold rating, and the target price has been increased to rupees 3,240. Now, most of these stocks are trading in the green, with Oro Pharma leading the pack with gains of just about 5%.
Okay, that's the lowdown on CLSA's note on what they're making of the Indian healthcare space. But Ashish, while we are talking about healthcare and diagnostics and pharma, let's draw your attention to Sun Pharma. That's a stock that you've picked out on the charts. What's making the stock look attractive? Last 6 months, last 1 year, decent returns coming in. So what are the next levels that you're spotting on the stock?
Absolutely. If you look at Sun Pharma, I think this stock has, over the past few weeks, has consolidated. But if you look at from the past year perspective, has done exceptionally well. And it has formed a double bottom pattern around 1750, showed a very strong rise in today's session, managed to break above that 20 days average. And it looks like the stock can move higher towards the prior peak, which was around 1920 levels. So the overall tone for short term for Sun Pharma is positive for 1920, and if one can hold from the medium term perspective, also we can expect the stock to cross back about that 2000 mark. So the one can create long positions here and maintain a stop loss of around 1780 on the downside.
Okay, so that's the take on Sun Pharma on the chart and the key levels to watch out for. But on that note, Ashish and Ria will stay on with us as we slip into a very short break. We'll keep it going with all the buzzers in today's trade just on the other side when we return. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus, and let's talk about Persistent Systems, because very good set of numbers coming in from the company, and the street is also echoing that sentiment, because that stock is up by 11% in today's trading session and continues to be at the highest point of the trading day, sitting there very comfortably. If you take a look at the dollar revenue for Q3, it came in at $360.2 million, which is up 4.3% sequentially. Rupee revenue is also coming at 3,062 crores, which is up 5.7% quarter on quarter. EBIT is coming at 456 crores compared to 406 crores, which is up slightly more than 12.2% sequentially. Net profit is also gone up by roughly 15% on a quarter-on-quarter basis. It's the EBIT margin really that's stealing the show over here. because that's gone up by 86 bips at 14.9% compared to 14% quarter on quarter. If you take a look at the deal wins and the TCV bookings, that has also come in looking rather healthy. Let's understand what the brokerages are making of this number from Persistent System. Nomura has maintained a neutral rating, a target price at 6,200 rupees per share. The resilient growth is being driven by strong execution. There's margin improvement, and that provides additional comfort. Deal wins, look decent, and strong execution is likely to deliver industry-leading growth. They've also delivered on margin improvement promise. So overall, Persistent System looking very good. Brokerage note coming in rather bullish from Nomura, although the target price is slightly under where the stock is currently trading. But nonetheless, the stock is doing very well in today's trading system. But the management tells us that they're on track to achieve FY25 revenue target, according to Vineet Desai, the CFO of Persistent Systems. Let's listen in to what he had to say about the company's revenue growth as well.
Post-COVID scenario, last 2-3 years, when the things have been challenging, we have been consistently growing. If you look at this 3 quarters in this financial year, first we have grown first half in 5% on a sequential basis. This quarter we have grown 4.3% on reported and 4.6% on constant currency terms. This is despite of the fact that this is typically a seasonally weak quarter for the industry. We had a furlough impact, and after that adjustment, we have been able to grow at such a nice pace. So we are pretty confident that whatever targets we have set up for ourselves for FY25 and FY27, we are on track, and we should be able to achieve that.
Okay, this is the word coming in from the management of Persistent Systems. Let's talk about yet another earnings candidate in Ria. Pidilite Industries is what you've picked up. Tell us what the earnings fine print looks like for this company.
Well, yes, we've seen a strong set of numbers coming in for Pidilite in Q3 of FY25. The sales have seen an uptick of around 4%. Even the EBITDA has gone up around 4%, coming in at Rs 798 crores in this quarter. Margins have come in at 23.6% versus 23.8% in the last quarter. Even the net profit is up around 3% to Rs 562 crores versus Rs 535 crores in Q3 of last year. The input costs have remained benign in this quarter, and the overall volume growth has stood at 9.7% on a year-on-year basis, and the CNB volumes have grown by around 7.3% over the previous year. Now, on the back of this, Macquarie has come out with a note on Pidilite Industries. They've maintained their underperform rating with a target price of Rs 2,600, saying that the Q3 EBITDA has been broadly in line, and volume growth, which was healthy, has been driven by consumer, bazaar and B2B segments. We've also seen healthy growth in the domestic arms segment, but the management commentary this time around has changed to cautiously optimistic when it comes to demand versus the optimistic outlook in Q2 of FY25. But the stock is reacting quite positively to these numbers, up around 6% as we speak.
Okay, so that's the outlook on Pidilite Industries, why the stock is doing so well on the back of its Q3 numbers. But while that's the earnings fine print, we also heard from Sudhanshu Vats, the Managing Director Designate at Pidilite Industries, and he shared the growth guidance going forward, also added that the company is committed to long-term margin guidance of roughly 24%. Let's go across and listen.
Over a long period of time, we have guided our EBITDA margins in a range of 20 to 24%. So we remain committed to this long-term guidance. Quarter to quarter, year to year, you will see us making investments which are necessary for growing the market, for addressing the new needs of India or some of our international markets as we go there. And therefore, I think suffice to say, we stay committed to the long-term guidance which we have given on our EBITDA margins. And we have given that range very clearly between 20 and 24%. This time around, as you saw, we are on the higher end of the range. We will stay committed to delivering in this range.
Okay, so that's the word coming in from the management of Pidilite. Ashish, coming to you, LTI Mindtree is the stock that you've picked out for us. Last 6 months, last year, low single-digit returns coming in. It's not done anything at all over the last couple of months or even the last 1 year. What's the outlook going ahead, and do you see the stock picking up some momentum on the charts now?
Yes, absolutely. If you look at LTI Mindtree, I think the stock was forming a triangle pattern, and it is giving a breakout in today's session. Also, if you think look at the past 6 days of chart, it was a very narrow range consolidation with a very good volume breakout that is happening. So that has opened the trend on the upside. We can expect the stock to move towards 6,400, which is near the gap area. That can be the target. And on the downside, one can maintain a stop loss for the stock, which is going to be around 5840 levels.
Okay, so that's the outlook on LTI Mindtree on the charts. Let's talk about Polycab, yet another earnings candidate. The stock is doing very well in today's trading session. Overall, it's been a good set of numbers coming in. The net profit has come in at 457.5 crore rupees, which is up 10.8% year-on-year. Revenue is also up 20.4% year-on-year. EBITDA has seen an uptick of slightly more than 26% year-on-year. EBITDA margins have expanded smartly at 13.8% compared to 13.1% this time last year. The management has shared its guidance for the next 5 years, wherein they say that the wires and cables business will grow at roughly 1.5 times of the market growth in core segments. For the FMEG business as well, they're penciling in a growth of 1.5 to 2 times that of the market growth in FMEG, and more than 10% contribution from exports also is something that they are aiming for. On the brokerage front, what Jefferies is making of these earnings? For Polycab, they've maintained a buy rating with a target price of 9,220. Morgan Stanley has maintained overweight, target price of 7,537. Macquarie has maintained an outperform rating with a target price of 7,928. And lastly, Citi has also maintained a buy rating with a target price of 8,600 rupees. These targets are significantly higher than where the stock is trading right now. Good set of numbers, good management commentary coming in. Brokerages are bullish. The stock is up by 4% as we speak. But we also caught up with Inder Jaisinghani, the CMD, and Mr. Gandharv Tongia, the ED and CFO at Polycab, and they are confident of achieving that 8 to 10% margin growth in the FMEG space over the next few years. He is also confident of the 2x growth in the FMEG business. Let's go across and listen in.
We will continue to grow at a rate which is going to be 1.5x of the industry growth rate, with EBITDA margin of a similar pattern of 11 to 13% cable and wire business. And the FMEG business, the EBITDA margin will expand over the next few years and should be able to achieve 8 to 10% of EBITDA margin in that particular business. Because of lower base, we believe will continue to grow at a rate which is going to be 2x of the industry growth rate. And EPC is a tactical business. It's very small in the overall scheme of things, but we believe that that business will continue to grow at a decent pace.
Okay, so that's the word coming in from the management of Polycab. Let's take a look at what Eicher Motors is doing. Ashish, you picked that stock out on the charts for us. Last 6 months, not done much. Last 1 year, however, more than 40% return is what this stock is given. What's the outlook going ahead on the charts?
If you look at Eicher Motors, I think 5,000 is the level where there was major support zone, and which it broke out earlier in the last month. We can clearly see there is a strong potential for the stock to reach towards the level of 5,400. That's what we can expect. And once that is broken, even 6,000 level looks possible. So I'm very much optimistic about Eicher Motors. On the downside, the support for the stock is around 4,900 levels. As long as this support is intact, we can expect 5,400 in the near term.
5,400 on the upside for Eicher Motors. Ria, you picked out Zydus Life for us. Tell us what's the news flow, and I'm sure this is not an earnings candidate yet.
Well, Zydus is not an earnings candidate, but they have announced the US FDA orphan drug designation, or the ODD, for Uznoflat, which is a novel oral NLRP3 inhibitor for the treatment of ALS, which will provide eligibility for certain development incentives, including tax credits for qualified clinical testing, prescription drug user-free exemptions, and a potential 7-year marketing exclusivity upon the FDA approvals. Now, in terms of the market size, ALS affects approximately 32,000 people in the US, and on an average 5,000 new patients are diagnosed every year with this disease in the US, as per statistics from the CDC. For Europe, more than 30,000 people are estimated to be living with ALS in the European Union and in the UK, while India has an estimated 75,000 people living with this disease. So positive news coming in for Zydus Life, and the stock is up around 1% on the back of this.
Okay, looking good for Zydus Life in today's trade, trying to make its way amongst all of the earning candidates and big winners today. Ashish, coming to you, can you quickly give me your take on Hindustan Zinc? That's the stock you've picked out. Last 1 year, decent returns. Last 6 months, you've seen quite the significant consolidation coming in for the stock. What's the outlook going ahead?
See, if you look at Hindustan Zinc, I think the stock after the consolidation has given a very good move on the upside over past 6 to 7 trading sessions. Not a single close below the prior candle low, which confirms that the trend is positive. Also, we are seeing a 10 days moving average trying to cross about that 20, indicating that the short-term trend is changed back on the upside. So the target for Hindustan Zinc on the upside can be around 515 levels, and on the downside, one can maintain a stop loss at 460.
Okay, stop loss at 460. That's a level that you should be cautious of when it comes to Hindustan Zinc. But on that note, we'll wrap it up on this edition of Market Fatafat. Ashish and Ria, thanks so much for joining us. Viewers, it's a goodbye. We'll wrap it up. Thank you so much for watching.